Hey, everybody, welcome back to the Startup Growth Podcast. I am your host, David Phillips, the founder and CEO at Fondo. And today we have an amazing guest. We have Jay Reno, the founder and CEO of PointHound. PointHound helps hundreds of thousands of users earn and redeem credit card points for free flights. If you want to check them out, you can be like Jay and fly free business class. Pretty amazing. But that's not his first startup. We're actually going to go back to when he started his online grocery delivery company and then his next company, Feather, which was the furniture subscription company that he grew to $15 million in annual recurring revenue, raised over $70 million, and ultimately got acquired back in 2022. And then we're going to jump into everything he's learned building that company and how he's applying that at PointHound today, his new startup. So I think you're going to really love this episode. You're going to learn a lot. Speaking of learning a lot, there is a tax deadline coming up on April 15th. I want to tell you about my company, Fondo. Fondo is the all-in-one accounting platform for startups. That means we put your bookkeeping, taxes, and tax credits on autopilot. We help over 1,000 companies like PostHog and 11 Labs, and we'd love to help your company with the upcoming deadline. So check us out at tryfondo.com. And without further ado, let's jump into the episode. All right. Welcome, Jay Reno, founder and CEO of PointHound. Thanks so much for joining us today.
Thank you, David, for having me. This is a talk I'm really excited to have with you.
Yeah, I'm really excited to have you here. Would love to just talk about sort of your origin story, the Jay origin story, and how you became a founder.
Yeah, it's a good question. I mean, I'll try and keep it somewhat brief, but the medium length version is I started building companies back when I was in college. They were really bad. I mean, the ideas were kind of good. The execution was really bad. And the first one was an online grocery delivery company. Good idea. It was 2010. Good idea. Wow. We were just a little early, and I probably wasn't the right person to build that company. Of course, fast forward 1 to 2 years, Instacart came out once mobile phones were a little bit more common. And yeah, I got punched in the face with that one, of course. Where I was like, I had that idea.
The first punch, the first founder punch.
yeah. I got my first founder punch. I put like 90% of my savings into the company too. So it's like, I mean, back then my savings was like, tens of thousands of dollars, but I did dump everything in, to try and make it happen. It was a really good lesson though. I mean, I learned a lot about building and it made me much more thoughtful and shrewd, and, early amounts of weathered, for that, after that company. Fast forward, I ended up starting a company called Feather, which was a furniture rental business, trying to help people basically, instead of buying and owning a bunch of stuff, we would help you get stuff into your home every time you were moving, which most people in their 20s and 30s are moving every 1 to 2 years. And instead of having to try and find where to get rid of it to who to sell it to, or, ultimately throwing it out, we would rent it, deliver it to you, and take it away whenever you didn't want it. That company was a YC company. We went through in the summer 17 batch, and we grew the company, raised $75 million or so from a bunch of great investors, sold the company in 2022, briefly took some time off and became a VC and joined a fund called 645 Ventures out of New York, doing, for me, like seed and Series A consumer investing. And then I had this idea for a new company, because I guess I can't get away from building, called PointHound, which basically helps people figure out how to earn and redeem their credit card points for free flights. And that the background on was, as I was building Feather and buying furniture, we were able to put most of the furniture purchases for the first 3 or 4 years on credit cards. So we were putting upwards of like $1 million a month on credit cards.
Wow.
Which, if you can imagine, would turn into a lot of credit card points if you have any idea what you're doing. And I did not. So I really started getting into it after trying and failing at a lot of things and being told by my friends who were point nerds, like, what are you doing? Why did you take 8 million points and transfer them to Delta? That's like actually the worst thing you could do. Or why are you taking points and buying gift cards with them for Ubers for like, your team or whatever? And I was like, I don't know. We had a lot of them. I thought it was a good use. And it was basically that story that that led me to start PointHound, which just most people have no idea how this credit card points and miles game works, and we're trying to help the average person figure it out.
Yeah, that's pretty incredible. I mean, what a story. You've been on every side of the table. You've been bootstrapper, dumping your life savings. You've been venture-backed founder, raised over 75 million, sold your company, VC, angel, and now back as a founder. So I think a lot of really exciting stuff to jump into. Would love to talk about the beginning of Feather. And so how did you come up with that idea, and at what stage were you at when you got into YC?
Yeah. How I came up with the idea was, it's funny. A friend and I were traveling to the Bay Area actually. And we said, well, why is it possible that you can Airbnb the space, but you can't Airbnb or rent the stuff inside of the space? Like all over the world, there are, 4 walls where you can rent. You could rent a long-term lease for an apartment. You could rent an office. You could do short-term leasing. Yeah, I mean, there's a whole set of kind of options for renting the space itself. But there was only one relationship really with the stuff inside of it, which is you buy it, you own it, and it's yours, and you have to deal with it, manage it, and own it, which comes with a lot of headache, especially if you're a consumer who, has a life and cares about things other than owning a bunch of stuff. So it was from that place where I realized that like the American dream had kind of changed. Instead of people wanting to own houses and cars and stuff and the white picket fence, people actually wanted freedom and flexibility in their lives. And that's like kind of this new American dream. And so I looked into it and realized that there were furniture rental companies that existed, but it was all like home staging or all big, corporate big box rentals that would rent stuff for corporate housing. And there was nothing for the 20, 30 something, back then millennial who was moving every 18 months between cities or within a city. And I jumped in to get started there. And to answer your second question, we had probably like 5 customers when I applied to YC. And the fun background there was I had cold emailed the CEO of West Elm when I didn't even have like the website live yet. And I cold emailed him. He replied. I was like, hey, we want to rent, we have this platform. We want to rent your furniture on it. He replies, goes, yeah, that sounds pretty cool. You should come in and we should meet. And I was like, okay, we met. And after 2 meetings, he was like, well, yeah, so how many, tens of millions in revenue you're doing? Like what, how's it going? And I was like, it's going really well. We hadn't launched it yet. Glad he didn't look, but we were like, oh yeah, things are good, and I left that meeting and was, I should probably apply to an accelerator or like really make this thing a reality. If this guy thinks this is a good idea, maybe it is.
Wow.
And the application for YC was due that day. As it turns out, literally that day. And I stopped at a pizza shop just around the corner from the West Elm in Brooklyn, where they have their headquarters, and tethered my laptop to my phone and just applied to YC. And I mean, the rest is history. I got in, and it definitely changed the trajectory of Feather.
That's amazing. And so how did you like approach the rest of that West Elm deal? Did you end up closing that deal and renting West Elm through Feather like during YC?
Yeah, we did. He ended up, it's funny, West Elm is owned by Williams Sonoma now, which is the bigger corporate entity and parent company of West Elm. So he approved it, but then I actually had to get approval from like the overlords who were above the West Elm CEO, which is kind of funny because they do like a couple billion in revenue or something. But yes, we did end up renting West Elm furniture for a long time. on our site.
Wow. And so you had the sort of supply side down from like day one. And then how did you get your first customers on the demand side? And like, what is that's the hardest, that's the hard part of these marketplaces, right? I mean, how did you approach that?
Yeah. The two-sided marketplaces are tough. What might be even tougher is owning and managing the logistics and the assets yourself, which is what we did.
Wow.
So we would buy
full stack.
It was it was semi-vertical from the beginning. We didn't manufacture our furniture on day one, but we did in year 3 and 4 design and manufacture all of our own furniture so that it would last well and it would have component parts. So if anything happened to it, we could change a part out, or it was easy to clean and all the stuff. And buying West Elm from West Elm was not as, they're not, I wouldn't call it fast furniture, but it's definitely closer to that than going to last for 20 years. And we needed stuff that was like nice and durable and whatever. So we did end up doing that. But yeah, we had the supply side as we needed it at that time, from West Elm, from a bunch of other retailers that we sourced, and a few wholesalers. And then we said, all right, well, now that we have furniture on our website, how do we get customers? In the early days, we didn't buy it in advance. We would only put stuff on our site that a user could get within our 1 week SLA. So we would only put something on the site that we could then, if a user placed an order for, 5 different items, we would then go, okay, I'm going to go buy those 5 different items, deliver them to my apartment, and then we would assemble it in my apartment, and then deliver it to the customer that day. And we being me and a TaskRabbit at that point, I would just hire a TaskRabbit with a van, and and it was 7 a.m. before work. I was still full-time at another company, where I would assemble and deliver furniture before work and then go to work.
Wow. So you were really just building the building the plane as you're taking off. This is doing everything and figuring it out. And then you scaled it massively. So all this stuff, was this just okay, you're putting all the puzzle pieces together in your head as you're doing it? And when did you have to start thinking about, how do I scale this beyond me?
Yeah, it's funny. The thinking how to scale it was just something that happened naturally over time, because when you're resource constrained and you don't have, $5 million debt facility on day one to buy furniture, you have to do things piecemeal. So it was user places an order, we go buy the furniture, deliver it. It's in their home. They're paying rent on it every month. We're starting to pay back the cost of the furniture. And I realized after I put it on, I had 10 or 15 customers. I was each of these orders cost me $2,000 to $3,000 for furniture. And I'm getting, call it $150 a month. Yeah, I'm out a lot of money up front. And I maxed out some credit cards and was well, here's where we need to, we need to fix this problem, which is I don't have access to capital up front to buy the furniture. So how can we solve these problems? And it was basically taking that approach, which is we need to prove out the model and prove that we can do it before investors would give us money, or, debt providers would give us debt capital to buy the furniture. And we kind of just got to jump in and, prove out your minimum viable product. And for us, that was the minimum viable product. So it's, can you get orders, and do you have furniture, and can you deliver it? And what does the model look like? And then once we had our first 10, 15 customers, it made it easier to say, here's what it looks like right now, and here's the model, and do you like this? And how can we scale it from here?
Wow. And were you based in New York at the time when you were doing all this?
Yeah. I was literally assembling furniture in my home, in my tiny New York apartment, if it would fit, or I would have to take it outside on the street and assemble it to then deliver it, because there was no space.
And did you get these first 15 customers through Facebook ads, or was it what did your website stack look like? Was it a landing page, a Google form?
It was a Shopify site, very, out of the box, $89 a month or a year, whatever it was. I don't remember at the time. they didn't have recurring payments. This was in 2017 or 16, 17. So they didn't even have like a recurring payments product in there yet. So we had to, and Stripe didn't have recurring payments. So we had to like hack together a way to charge our users. Like we did it manually for a long time and be like, all right, it's this day of the month. Now we got to charge them again on this day of the month and manually hack that together. But our first customers came from, well, I posted it on just my Facebook account. Back then, Facebook was, I don't know, I guess we still used it. I posted it on Facebook, and I had one friend who was a work colleague order furniture, and then a friend of his ended up, or a friend of a friend ended up ordering within like the first 3 orders. And I was like, I don't know who this third or second or third person is. Like, wait, that's actually a good sign. If it's not like close friends or family relatives or whatever, I'm like, someone found this interesting and useful. That to me was a good sign. And that was when I applied for YC. It was like right around then, and we had like 5 customers, 10 customers, maybe. Yeah, and it was mostly just through a Facebook post, no paid ads, telling people that it existed, and things changed a little bit when we got into YC, where we then had a batch of, back then it was like 80 or 100 people or companies coming in for the summer who needed furniture for 3 months. And we were like, well, we can help you with that. Yeah, that was very helpful for us to figure out, like, how can we make this model repeatable with like 30 customers in YC? And those early customers are super helpful to teach you a lot.
Wow. So, okay. So you come up with this idea, 2016, you get one of the biggest furniture companies and the most successful and desirable furniture companies in the world to sign up for your platform without having a platform yet. You get your first customers by posting on Facebook. You get into YC. You're doing everything super manually. You got 30 customers, and now it's working. And so, did you raise money soon after that?
Yeah, we had to raise a little bit of money during the batch, where one of our group partners was like, we generally don't recommend this. Like, you need to focus on your product, but you need cash because you need to buy furniture or you're going to die. And even the money that YT gave us back then, which is $125K, if you do the math, that's like not that many orders. So we were like, and we had other expenses too, So we had to raise a little bit of money to just get through YC. And then towards the end, we grew really well, like 8% week over week. And I think we went from 0 to 25K in MRR by the end of the batch. So it was 2-3 months. And then we raised
amazing.
We raised a really great round, like a $3.5 million round back then. That was enormous. From great investors.
That's amazing. Okay, so you raised your $3.5 million. Do you move back to New York? You start building out your team, and how did you think about goals for the company at that point? Because it's all happening so fast. Now you have $3.5 million. How did you think about what were the goals next for the company? It was a really complicated business. It sounded like you had to there was a lot of moving parts you had to manage.
Ton of parts. Yeah, the immediate goal, I mean, what worked for us was just setting a 7% whatever week over week growth rate and saying, as a team, which was back then 3 people, if we don't hit this number by, like Thursday or Friday, and we have until Sunday, we all have to stop what we're doing and figure out how to hit this number, which worked really well. Like, the website stopped getting, if we didn't, and our CTO would go to IKEA and like talk to IKEA customers being like, hey, do you want to buy the shit or do you want to rent good stuff for less? Like, we had to like growth hack because ultimately, like, getting customers was really important. It was more important for us than the website functioning well or like building out new products or features or whatever. So that like maniacal focus on growth in the early days was really valuable for us. And we kept that going after demo day, when we had raised enough money to then, last for another year and a half. And yeah, our focus was on revenue. It was on growth. Our goal is we hit $1 million ARR by December, and we had finished the batch in like September. And yeah, the focus was primarily on growth. But the the funny piece is we also, because we move furniture and have, we have to assemble, we have to receive furniture, we have to assemble the furniture, and then we have to deliver the furniture. And then when it comes back, we have to store it again. We needed a warehouse space, but we didn't have that much money to have like a nice big warehouse and a small office. So we combined them and we rented a retail space in an undesirable part of Dumbo in Brooklyn. And that retail space was our office, our pseudo showroom, and behind shower curtains that we had hung up on the walls, like a shitload of boxes of furniture. And it was a like 3,000 square foot space, 2,000, 3,000 maybe. And we operated out of there until our Series A, which was crazy. It was hilarious. There's just UPS trucks coming in and out all day. It through a tiny customer doorway, like a typical door. It just in and out. People using drills to like assemble furniture all day, and we're out there taking work calls or working. It was just absolute mayhem, but beautiful mayhem.
Wow. That's incredible. That's like you really get to see and feel the product market fit happening.
You have no choice.
You have no choice. And how big was your team now? So you're in Dumbo, you've got your office warehouse, you've closed $3.5 million. Now, how many customers do you have? How many team members do you have?
Yeah, I don't know about, I can't remember the number of customers. We figured out that there was a B2B element and a B2C element where companies like, there were short-term rental businesses like Zeus or Blue Ground or Star City, WeWork, et cetera, who wanted furniture and they wanted to finance the furniture, have the logistics managed. And we were like, well, we do all of that naturally in our product. So we can do that for businesses, and we can do that for businesses while we're also focused on our like consumer product. So we were probably 10 full-time, including like delivery operations and warehouse, and probably stayed somewhere between like 10 and 12 until our Series A, which was not easy to raise, by the way, but we ended up finding a really good partner.
That's great. I mean, that's the crazy thing. It's never easy, right? Even though your company is doing so well and you have such amazing product market fit, amazing team, it's growing. I'm sure there was a lot of skepticism because no one had seen a business like this before in probably 30, 40 years, right? So what was that like? I mean, well, how did this feel compared to like Local Bee, right? When you built that and you sort of, you moved on from that, but how did that feel building Feather compared to that initial experience building the grocery delivery company?
I feel like the grocery delivery company didn't get off the ground really. I mean, we were able to take customer orders, send those orders to grocery stores, have them deliver them. Like all that worked, but we didn't get the momentum we needed to actually get off the ground, kind of like flying a plane. We're like on the runway and we're going 10 miles an hour on a plane, basically. It's like, well, they're going to take off like this. So I've noticed that motion and growth begets more motion and growth. Like if you're growing and something is happening at a fast enough rate, then it tends to compound on itself with users talking about it to other people or news publications or whatever you're like, whatever you need to sell more of your thing, tends to happen more and more organically when you're going faster, touching more things. Yeah, and we noticed that and didn't really want to slow the momentum down. Yeah, and between our seed and our A, I mean, we went from 300,000 in ARR, like 250,000 ARR to 3 million. And and that was basically where we could get to until we started running out of money to to deliver furniture. And then we needed the Series A in order to close on a debt capital, debt facility, so we could buy furniture not with equity capital, but with like debt, and have that product stood up, which was very important for us.
What was like the biggest surprise learning in raising your Series A?
That we were one of the at the time in our batch, we definitely had like one of the fastest growth rates growing, and we raised money from fantastic VCs like Kleiner Perkins and Bain Capital Ventures and NEA. And one would think that might just continue on forever if like you did that and you're growing at the rate you are, but don't take anything for granted, and assume that the last dollar you took is the last dollar you'll ever be able to raise, because you can get. I mean, everything looked good, everything looked great on paper, but it was a very difficult fundraise for us to get to the Series A. So persistence and and I guess like not assuming that something is going to take a lot longer than it will is very, very important in general. Otherwise you can get into some tricky situations.
Wow. I mean, because you would think that VCs would be begging to invest in you at that point. I mean, the growth is killing it. You're like reinventing this new market. You have great investors, great founder, great team, great traction. So it's I think as founders, that's, it's always hard. It's always hard. And I think that your point about being persistent and like expecting the worst and just keep going is so important. And so that unlocked the next level of growth for you. You got did you get a line of credit, or did you get a venture debt, or how did you finance the debt part?
Yeah, we had a warehouse facility. It ended up being about $30 million to purchase furniture and on specific repayment schedules and whatever. So not venture debt, which is good. But an actual like line of credit from a big bank. And that was really important for us to unlock scale, because then we could buy furniture without needing to touch equity capital, which investors liked and we liked.
Yep.
So that was all really important. Yeah. I think to kind of conclude how difficult certain things can be, and needing to plan around that is really important, because we had inbound from pretty much every VC you could imagine, and we just assumed that if that was the case and everyone's like, oh, you guys are so great, your company's so cool, let's meet and let's talk more about it, then it'll just be easy. But almost all of them passed in the end, even though we had all that inbound. So I would say nothing is done until it's done. And remember that. And just keep your focus on building a good company with good economics. And that will more often than not be a thing that gets you to whatever your next stage is, whether it's raising more money or getting profitable or a sale or whatever.
Wow. So you took that momentum from YC, the $3.5 million you raised, you grew to thousands of customers across SF and New York. You've got your warehouse office set up, and you're growing really fast. And then you close this $12 million Series A, $30 million line of credit. What's the next phase look like for you? Are you still staying in New York?
We did, yeah. We stayed in New York. We got an office that was suitable for more people. We ended up hiring a great team of VPs and just great executors. So we did that. We stayed in New York. We were in New York for the entirety of the company. And yeah, it was between kind of like right after the A was a quick sigh of relief, and then getting right back to work. And we had to, you have to get to the next level, which for us was, we went from 3 million in revenue or so to 12, 15, somewhere in there.
Wow.
And we raised our Series B which was also very important for us to continue building out the team and to continue building out the regions that we were servicing, which then became a number of other cities. And then we started designing and manufacturing our own furniture because we realized the longevity of the furniture itself is a very key element in our business model. And you don't really know how long something's going to last until it dies, until you start getting a bunch of chairs or sofas back and you're like, well, this only lasted 2 years and we thought it was going to last for 5, right? Or 4. We need to rethink these expectations because now the model doesn't look great. So we're like, we have to design and make our own stuff that will last for this long. And if anything happens to it, it's cleanable or it's easy to change a part out or whatever. So then we undertook the challenge of designing and manufacturing our own furniture, which was really fun and also really, really hard. And pretty much all the furniture in my house right now is all feather stuff that we designed and made, which is kind of fun.
No way. That's incredible.
Yeah, I love that.
So you had to like sort of, as founder and CEO, like you're going from optimizing the 7% week over week growth rate to now, scaling the team, growing the revenue, like gross margin sounds like it was really important, like optimizing for that. And like, how did you balance optimizing, all the unit economics with like the growth that you were aiming for and that you needed to keep unlocking more capital?
Ironically, that became our challenge, which was how do you acquire more customers at a good LTV to CAC? How do you scale up the operations while keeping your overhead low enough and your margins high enough, like your unit economics. And that's that delicate balance. It's almost like a marketplace where you need supply and demand. You're like, all right, well, we have a certain amount of resource, which is capital, and we want to grow the total, we want to grow our revenue and get to profitability if we can. And we need to, expand our markets. And we also need to, focus on margins. That's it. I mean, that is the name of the game as a CEO and a team, is to try and figure out how to do all of those things at once. That's
awesome.
It's tough. That's it.
It's tough.
That's the job of like CEO, finance department too.
Yeah. And how? What was the peak revenue that you brought Feather to? So you got to, sounds like 12 to 15 million in revenue. You raise your Series B, and then you just keep growing.
Yeah. Well, we raised our Series B February 2020. And what happened in March or April 2020?
Oh man,
the world slowed down, and not only did people not want people to, they didn't want to see people, but they didn't want to have furniture delivered into their homes, and so that basically like halted our growth rate. And because we had recurring revenue, at least it like kind of flatlined it. So we didn't go to zero if we were like selling furniture, and our users they were paying monthly, and so we were at least steady. But it was a weird time because I don't know if you remember if you were rebuilding a company at that time.
I had just started Fondo back then. Like I launched in February 2020 on Bookface.
There you go. Yeah. I mean, it was if you remember back to
such a strange time.
There was a fog over everything, like in a way
Totally.
that you couldn't predict what was going to happen in a week, which is completely unheard of. Like right now you could say, all right, I see that there are tariffs or what. Like if you're running a furniture company, you look at tariffs, you're like, okay, there might be tariffs on our product, may or may not. And here's what the macroeconomic climate looks like. Like things are a little like cloudy right now, but it's kind of binary. You're like, this is going to happen or it's not going to happen.
Right.
With COVID, it was like, I don't know if we're going to be able to, like, if people are allowed into homes, are we part of this new, like, essential business so we can actually deliver furniture? You're like, are we halted?
It just changed everything.
Are we halted for a month? Are we halted for a year? Like, I have no idea. How do you plan around that? You have no idea what's going to happen with the pandemic. Is it getting worse? Is it getting better? So back then, with
Wow.
a business with like heavy logistics and operations, there was very little you could do. You just kind of had to like wait
Yep.
and see what happened for months and months, which was wild. So that
Wow.
definitely
So the
changed the
business completely
trajectory of the
changed.
company. Yeah.
Wow.
Um,
So you kind
yeah,
of like the market forced you to kind of have a restart moment.
yeah,
And
yeah,
like, but
definitely.
like you don't know what the market is anymore. I mean, that's crazy. That's a crazy time to be running a scale business.
Yeah, yeah, yeah. I mean, like everything just halted. So we're like, well, consumers have left cities and have gone to like upstate New York, or they left the city in a lot of cases. So our operation was just in cities. What do we do? Like,
Wow.
how do we serve people? Do we sell furniture and ship it to their homes wherever they are now? Like, what do we do? Um, and yeah, those are the things that can happen when you're running a company. You just can't plan for it. You have no idea what's going on.
Wow. So the pandemic happens, changes the business, but you continue to grow. You continue to power through the pandemic, and ultimately you sell the company in 2022. So as a founder, that's like a huge moment, and you sell the company to Vesta in 2022. But you still wanted to keep going. You didn't want to retire, but you did do some VC for a little bit. So how did you end up deciding? Okay, I want to go back into being a founder.
Yeah. I think I'm a builder at heart, in a lot of ways, and I joined a really awesome firm with really great people. And a lot of it is relatively established, like the strategy and everything. I love working with founders. I love building, and I think for me, like, I mean, I also love investing in companies and seeing things from the earliest stages and helping founders bring those things to life. And I was doing that regularly, talking to people all day, and you know, I I love that very early of building. So I decided, I had this idea for the new company that I'm working on, PointHound. Again, back when I was building Feather, and realized that there was really back when I started, there was like one company that existed in the space, and we didn't think that they were addressing the market properly, or the market that we were going to go after, which are people who don't understand how points work. So I yeah I decided to jump back in and make that happen. And went through YC with a company, and worked with Gary, Harj, and Rich Iverman, and Serby. And yeah, it was another awesome time to go through YC a second time.
Wow. So yeah, you come full circle. You're investing in startups. You're launching, helping other people launch,
Yep.
and then you're back in the
Yep.
gauntlet. That's pretty incredible. So, what credit cards were you using at Feather, and yeah, which cards were you using? What was around?
Yeah, the answer was the wrong ones. Completely. Yeah, I was doing absolutely everything wrong. And that was people have been told, and most people know, that like the Amex Platinum is the best card. Um, well, that's not necessarily true if you're trying to earn points. It's a good card for perks and benefits. It's the most expensive consumer card. Uh, but you don't get perks and benefits when you're putting spend on that card. So we put, millions and millions of dollars on that card, earning 1 point for every dollar that we were spending. And we would also put a lot of spend on, a Brex card, which earns points, but they're not the value of them isn't very high. Um, it's a great product, like Brex as a whole. But the earning points and redeeming those points is, you're not getting nearly as much as you could with other cards. And then we were also putting on Delta cards because we lived in New York, and Delta is the hub there. And so, well, if you earn Delta miles, then you're great. But
Mm-hmm.
as it turns out, redeeming Delta miles for Delta flights is like 5 times worse than taking points that you earn on a credit card, transferring them to one of Delta's partners, and booking that exact same flight. You can get that flight for 80% less. Um,
Wow.
so it's those little hacks that we kind of figured out over time by failing that led me to say, does anyone else know how this works? And there's this absolute rabid niche community of points nerds, point experts that just love it. And like, this is their full-time thing. They love it. And then the other 99% of people are like terrified by points and just use them incorrectly, and turn them into gift cards, cash back, where you could be getting 10 times the value by using a site like PointHound to redeem those points.
And if you could go back, or if you were consulting your previous self, which cards would you recommend that you used?
Yeah. At this point, as a business, there are a few great cards that you can open. The Amex Business Gold gives you 4x points in your top 2 categories each month. So that would include like some of those categories include software spend, which I would imagine many software companies who might be listening to this podcast spend on software. The Amex Gold will help you with that tremendously. And PointHound's website has a whole list of the cards that are good for businesses, and you can just kind of check it out if you want. That's one. And then there's a card that gives you 2x points on everything, regardless of what it is. So, well, that's twice what I was doing. I could have just used this one card. I would have gotten twice the points, and then I could have redeemed them for 10 times the value of what I was redeeming it for. But I didn't do any of those things until a lot later. And so it's these little tiny changes you could make that will significantly increase the number of flights you can take for the same amount of points, like tenfold. So these tiny little things. And that other card is the Capital One Spark Miles card. Gives you 2x points on everything. And yeah, paired with a tool like PointHound, it helps you can get lots of free flights for free.
That's amazing. So PointHound is free, and you remove a ton of friction, right? Because being a points nerd is not easy, right? It's a lot of work. So, but PointHound kind of takes the friction out of all that.
Yeah, exactly.
So how did you approach that?
Yeah, I mean, it's difficult. When we were building Feather, we had this unique opportunity to help change consumer behavior, which is not easy, right? Instead of people buying furniture, we said, hey, don't buy it. That's actually not as good for you. You should consider renting it. This solves your problem better. And you over time, over many, many years of doing that, you figure out how you can slowly pull people in the direction that is good for them, like actually what they want, but is different than what they're already doing. And people do not love change on aggregate. They like once they figured something out, they like to do it the same way over and over again. You know, like brushing your teeth, maybe. You're like, I always start brushing from this side, and then I go back to this side. And someone's like, if you start over here, it's better for you. And you're like, never. Why would I do that? I always do it. So the same is true with credit card points. And most people, swipe their credit card that they have, and they earn whatever points, miles, or cash back that they have. And changing that behavior is difficult. But again, we spent 6 years doing that at Feather with consumers, and pretty much the same consumer. So we've learned a lot about how to lead people along and reduce the friction and help bring them through an experience that is ultimately what they're saying they want, but they're resistant to, right? So you basically just need to guide them through. And yeah, we've learned a lot along the way.
And how are you approaching growing PointHound now as a brand new company, now back on that journey of getting your first users, since PointHound is free, but they are benefiting. So your first customers, like how are you approaching getting your first customers at PointHound?
Yeah, our first customers were, we posted on Bookface when we launched, which was really valuable for YC founders. And we posted on Reddit that we existed, and then we built this free tool to help people redeem their credit card points. And that Reddit area was like where the point nerds lived. And they had a lot of great feedback and a lot of positive things to say about it. So that got us jump started. Now we have hundreds of thousands of people using PointHound.
Wow.
And it's been almost exclusively organic.
Wow.
It's only recently that we even started like running some ads or paying. Now that we know like who our user is, who our demo is, what the product is that resonates with them. And yeah, that's kind of the feedback is do not scale the thing until you figured out what the thing should be that solves a problem for people. Otherwise, you're going to scale the wrong thing. You don't want to do that.
Wow. That's incredible. Well, Jay, it's been great to have you on the show. I feel like we could do like a whole other like 3 hours. So maybe I'll have to try to convince you to come back on.
Give another,
or we could do this line.
Another 4 or 5 hours. We can just keep going.
Let's just keep going. Yeah. But Jay, this has been incredible. Where can we find you and PointHound?
Yeah. I live in the Bay Area. You can physically find me here sometimes. You can also find me on airplanes traveling to great places in business class for free. And when I'm not doing either of those two things and I'm online, pointhound.com is one place. And that's where I spend all of my time right now.
Amazing. All right. Well, everyone go and check out PointHound so you can learn how to fly business class like Jay. I have definitely been nerding out with PointHound, used it for my honeymoon. Thank you, Jay. So super excited and love your story. So thanks for sharing it with us and we'll see you soon, Jay.
Thanks for being a great host, David.
Thank you, sir.